Hello, welcome. I hope you've had good lunch, good rest. Nobody's falling asleep in here. So thank you for joining us today. We'll have a few very, hopefully, exciting and insightful discussions this afternoon. My name's Tetiana George. I'm the CEO and co-founder of Curium, a company that can solve your compliance and claims problems, let me put it this way. And in addition to that, I'm also the director of the board for InsurtechLIVE Australia. It's my third year this year, and I'm very proud to be here at our signature conference today. So this year, InsurtechLIVE Australia decided to increase our profile not just inside of the country, but also globally, and show the world that we've got companies and ecosystem well worth investing in and working with. So as part of that effort, we have partnered with PFC Consulting, which Adrian is the managing director of, and we're going to be releasing our report about the ecosystem Australia, featuring some of the best case scenarios and best case kind of insurtechs that are coming from Australia, hopefully abroad. So for the coming session, please welcome Adrian, who's going to be leading this conversation and take questions at the end of it. Don't forget to use Slido. Thank you.
Thanks, Tetiana. Very quickly, the purpose of this session really is to bring some, really bright minds on the investing side of InsurtechLIVE to the event and to the crowd here. It really is an opportunity for you to ask questions to each of them, and I would strongly encourage you to do that. I'm assuming you all know how to use Slido, but we won't spend a lot of time on introductions because there are bios available on the InsurtechLIVE website. But very quickly, to my right, we have Shaun Hutchison, who's the Director of Insurance Services at RS Ventures and is ex-Suncorp. We have Kirsten Bernhardt, who is a venture capital investor with Artesian Capital, and we have David Krawitz, who is a non-executive director of Honey and formerly COO and transformation officer at Allianz. So I'm going to kick off the questions. The first one goes to you, Kirsten, please, giving the sort of the venture capital perspective. And I was just wondering if you could give us your perspective on the primary factors that you look at in making investment decisions in the Australian insurtech market, and also the extent to which they borrow from global themes.
Sure. Hi, everyone. So as was mentioned, I'm an early stage technology investor at a venture capital fund. Venture capital is only suitable for kind of 1 or 2% of startup companies globally, so it's a very specific type of capital, and that sits across to the insurance or insurtech sector as well. So we see a lot of companies, but we make very few investments in the space. I should caveat what I'm about to say with that. What we're looking for, and this is true for venture across any sector, we're looking for globally scalable business models, solving large unmet needs, with huge addressable market opportunities. So we look for barriers to entry, and we look for technology or intellectual property moats that make the business models defensible. We look for teams that are experts in the field of what they're solving a problem for. And as I say, critically, they need to be large, scalable businesses, most often that are not just going to address a problem in Australia because we're a pretty small market, but being able to service Australia and then take those products or solutions into international markets. As I say, that is kind of the lens we overlay insurtech investing as well as a number of other sectors.
Thanks, Kirsten. And similar question to you, Shaun, just sort of coming from a different, maybe the non-VC perspective on the same question.
Yeah, thanks, Adrian. Hello, everyone. So RS Insurance Ventures is a fairly new entity in that it's private equity backed, 25 years of investment experience, but only the last 6 to 8 months have we started to venture into the insurance sector and the insurtech space. My background is, as Adrian said, actually within the carrier. So I bring insurance knowledge to the table, and we've got experience in investments as well. Our approach is very different to what you would typically see in a VC fund. We are far more interested in being hands-on in our investments and taking a practical approach to that. There's no guide rails for us like you would see with a traditional VC around stage of investments, equity percentage ownership, or equity contribution value. We are happy to talk to any businesses that are supporting insurers or brokers to provide better services for their customer, either in a technology or sense. And so our approach is very much hands-on. We like to understand who the founders are, understand what the opportunity looks like. Does it actually solve a need for an insurer based on our experience of what the insurers are asking for? And then can we scale that through bringing our expertise and experience to the table around introductions through relationships that we have, strategic insights based on having worked inside an insurance carrier, and those sorts of things. So very much a hands-on approach that is about understanding the founders and their value, more so than where we could scale it to in the long term.
So just sort of picking up on that thread, might go back to you, Shaun, asking you to just pick apart a little bit the importance of the founders or the management team itself from the idea, because there can be a perception out there that it's the idea that's important, and it'd be good to get firstly yours and David's in a second perspective on that.
Yeah, look, I'd start by saying the idea is obviously very important. Like, without an idea, there's not a discussion to start. You've got to have an idea or a vision where you think there is value that you can add in the insurance sector. But from my experience, I would rank capability over idea. I think understanding the founders and the team that they've built around them and their capability is certainly more important in the long run than the idea. I think every founder in the room would attest that the idea that they formed their business off has had many iterations and many pivots over their journey, and where they've got to now is probably different to where they started. And I think that's credit to the founders and their ability to be able to pivot and move with the opportunity as it presents.
I'm going to throw that same question to you, please, David. It's a special mention to David, who's dragged himself up here with a broken femur as well.
You do what you have to. So, look, firstly, I'm a little different than my co-panelists here in that I invest my own money. I've got 5 different insurtech and fintechs that I've invested in over the past few years. And I say probably the quickest lesson I learned from my own investing was how much more important, in my mind at least, is team over the idea. Idea has to be good, but the real differentiator I see is the team. And I, being honest, see some pretty big gaps across teams. It's not to say people aren't all smart and hardworking, because everybody is, but I want that 1%. I want the people who maybe not that much smarter, but so much more driven. And if I think about the best teams I work with, now I have a background, I worked at McKinsey, New York, people there work pretty hard. These guys put that to shame. They are so relentless in their focus and how hard they work. And it's not just time, it's the volume of work they get through. So that, more than anything, is what I'm looking for when I'm going to invest.
Kirsten, I'll give you a quick opportunity to add to that.
I think we're looking for the 1% too, very, very much so. I would completely agree, and particularly at the earlier stage of investing, I think investors accept that the idea is going to iterate and sort of evolve over time, and it's the team behind the idea that's critical. I will say, as businesses get more mature, so we invest across the spectrum, early stage to growth stage, and for sort of growth stage or scale up companies, the product and the business model really start to come into their own in terms of importance. And sometimes we see at that stage the team may swap out because we need a different set of skills coming in to lead that business forward. So, but certainly at the earlier stage, the team, the founders in particular, are everything.
Thanks very much. So again, picking up on a thread, but Shaun, you and Kirsten both have mentioned the idea of concept of scalability. Question is, how do you assess scalability in an insurtech, and what metrics do you look for, or is it just something intuitive? Back to you, Kirsten, firstly. Thank you.
So I can start on this. In terms of what we look for, I mentioned before, if it's an insurtech company that's offering quite a unique insurance product that's built for the Australian regulatory framework, that's to service a niche subset of the Australian population, that's generally not going to get us excited, because it's not targeting a TAM, a total addressable market, or a serviceable customer base that's going to be big enough to generate the returns and upside potential for an investor like us. It can still be a great business, a profitable business, but it's probably not one for venture institutional investment. We look for products that are servicing kind of across the value chain, and by that I mean digitising several aspects of the insurance sector, and we look for products that are able to be translated into different geographies. So as an example, one of our investments is a company called Hillridge. They're offering a new product for the agricultural space to protect sort of crop yield from weather events. Agriculture insurance is a massive market in Australia, but equally they're sort of expanding into Southeast Asia, and their product is quite transferable from different markets. So that opens up the revenue opportunity, the addressable market, and therefore the potential scalability of that business. That's really important to us.
So I'm going to come back to you, David, on this one, and really trying to pick apart the extent to which, at the outset, international scalability is a requirement.
Scalability obviously is critical, but what's really important here is to convince people why you're going to grow that business. I think often I see mistakes based on the fact that other markets are huge. Yeah, the US is a huge market. That doesn't mean you're going to make any money there. You got to have a why first. And to me, I'd like to see that success here in Australia. Show me how you're going to grow and why you're going to grow here in Australia. And if that's super compelling, I think then you can start looking at other avenues overseas. But the notion that somehow overseas, because they're bigger, are going to make it easier, it's just not the case. Now, the other aspect to this on overseas is there's something unique. And this, to me, would be what's unique in Australia that makes it more likely you'd be successful overseas. A couple areas that come to mind for me. One, regulation. We are just about the most regulated insurance market in the world. So if you got something compelling here, yeah, it's probably reasonable to assume you could sell that overseas. The other is around climate. Better or worse, we've got probably more climate-related weather events than just about anywhere, certainly based on our size. So again, you got something compelling here that might be better even starting overseas than starting here.
I'm going to bounce this next question back to you again, David, but you touched on regulation there. Do you see that as a negative, as a disenabler in some cases in Australia?
It's kind of a ticket to the game. And coming from a senior exec team at one of the big insurers here, I can tell you that regulation is first and foremost in boards and senior management in Australia, and that's not going to change anytime soon. And obviously after the Royal Commission, that was amped up considerably. So you really need to understand that environment. Now, if you've got a RegTech product that can help make that easier for insurers, great. But for everything else, you better really understand whether or not you're adding any risk to that business. Because I can tell you now, if there's even a hint of adding risk, you're going to get a lot of closed doors before anybody really wants to talk to you.
Similar question back to you, Shaun, on just the extent to which the regulation that does exist in Australia makes it a good testing ground versus just makes it very difficult to get going.
Look, I think the answer to that, Adrian, is both. If I put my investor hat on first, I'd say yes, regulation it's critical for the industry, but it is also something that means the investment cycle, or from an investor's perspective, investing in an insurtech is going to have a longer lead time for regulatory compliance, for customer acquisition, path to revenue, and the like. And so that can be a bit of a deterrent from an investor's perspective in investing in the market. Equally, I think the insurtechs that put the right lens on regulatory compliance and focus on it potentially have a competitive advantage. As David said, the Australian market is highly regulated, so it's a really good test ground for insurtechs. And that means that compliance can potentially be a barrier for entry for likely competitors, particularly ones that might be coming from other geographies. And so I think leveraging the fact that you are compliant as a business and you have invested in that compliance, you should be using that as a marketing pitch for a competitive advantage, because it is making it much more difficult for others to take your spot.
Thanks. A few questions coming through from the audience, which is great, so I'll sort of jump to them early, I think. Kirsten, question for you. So you discussed the concept of a global addressable market, essentially, which maybe is comprised of lots of local addressable markets. What should be, for an insurtech, the future focus for a compelling business model? So should they have an eye on global scalability early on in the process, or should that evolve?
I think it depends what part of the insurance ecosystem or value chain you're working on. So as an example, we've seen insurtech products that are building tools to enable digital or virtual inspection of assets, right? That as a product is a pretty scalable cross-geography opportunity, right? It's not heavily regulated. It's able to slot into the value chain in the insurance industry for a number of different insurers and regulatory environments. So that as a business or product is something that I would call it's tech, heavily tech-enabled, and it's quite scalable internationally. By comparison, the agricultural insurance startup that I mentioned previously, that's had to be built first to comply in the Australian landscape, to build in data sets around the Australian weather and risk to Australian crops. So it's quite geographically focused for its first few years, but they've got a business plan and have now started to execute on how to take that into new markets. So I would say it's heavily dependent on what you're building, where you think you fit in the supply chain. And like I said, if you're health insurance is a good example. If you're building a new type of digital health insurance product for a subset of the Australian population and the Australian health insurance market, it's unlikely that that's going to be able to be sold to enough customers for us to be able to get a return on our investment if the eyes are only on that Australian market opportunity. Noting that the US health insurance market is entirely different, and you effectively have to build a new product and business model to service that market. Just understanding how you can take what you're building here across into other geographies is really important. So I don't know if that answers the question.
I don't know either. To the anonymous questionnaire, if that doesn't answer your question, please ask another question. So sort of first question, which I'll jump back to, because it comes back to the people. Good question around, in a tougher labour market, which Australia has been for a while now. How do startup insurtechs manage to find the right people, and that it's a 1% of a tough market already? How do you find and motivate those people? David, is it obvious candidate?
No, happy to answer that one. Look, again, speaking from my experience, it's very different. And I think it's actually one of the Achilles heels of incumbent insurers. You could have, at a big place like Allianz, someone in the IT team, an engineer who's just off the chart stellar. But the amount you can remunerate that person is pretty fixed. And even if they're at their top, it's probably less than going to be able to get elsewhere. You don't have those constraints if you're a startup. Now, you need to have some money, obviously, so this helps. But you can offer that person who's the best of the best of the best more. You can get them some equity, you can offer more cash, whatever it takes. I think it's well worth putting the money on the table for that, because you'll find those really best of the best could be as good as 5, if not even more, regular people in your team. And that's really how you're going to stand out from the crowd.
That's a similar question to you, Shaun. I think would be good from the having also come from an industry background.
Yeah, to be fair, Adrian, I've never set up an InsurtechLIVE or a startup, so I don't know how hard it is to find the right talent. But what I would say is that's not unique to the InsurtechLIVE industry. I think finding the right people is one of the greatest challenges for any business, whether you're a large corporate or a small entity. I think the nuance is that the smaller you are, the more impact an individual has. So you can't sort of hide between the cracks if you're not performing. So I think to David's point, put in the effort up front, make sure that you are happy with the person that you're employing, that they have the capability that you're looking for the role that you are after, and do your due diligence to make sure that you're not making the wrong choices.
Yeah, but can I just add one point? Just the other, I'd say, again, being straight, you got to be pretty ruthless too. You want to keep turning over that team to make sure it's as high performing as it can be. And you probably got to be a little tougher on that than you might find in a corporate again. So if you're making the call that someone's not quite there, move them out earlier. Don't wait around, because you're just wasting time otherwise.
Okay, question back to you now, Kirsten. So just sort of general landscape question on where you see the market at the moment. So the question is, how competitive are you finding the InsurTech investment market at present? Are you competing for deals, or are you able to be selective in the current environment?
I would say it's not overly competitive, to speak frankly. I think there is an increasing volume of deal flow. So we look at a lot of InsurTech or insurance adjacent technology startups, but we've made very few investments in this sector for all of the reasons that I said at the start. Like, this is, our capital only goes to 1 or 2% of startups that we meet anyway. And in the insurance landscape, or InsurTech landscape, it's a very specific type of business that's got to tick a lot of boxes for it to suit us. So we meet with a lot. We've seen quite a few. There was probably 5 to 8 years ago a bit of a tale of InsurTech startups that emerged and then sort of failed, largely because their risk models weren't worked out, and that they didn't fully understand how to scale their business in the regulatory environment they were operating in. But yeah, we are quite selective on what we're investing in.
Do you want me to add?
Go for it.
Yeah, look, I would say the whole reason that RS Insurance Ventures exists is because we see a gap in market where there is potentially a shortfall in investment into the InsurTech space, and so that sort of represents an opportunity that we can help by bringing industry experience to the table with equity to help solve that. I would say, at least from my experience, and pardon this expression because it's terrible, but the idea of an investor treating it like a day at the races where they go and put bets on, multiple bets on, and hope that the 2 or 3 get up and they cover the losses for the rest of the day, just doesn't exist anymore. I think those that are investing in the insurance space are showing a lot more due diligence. They're doing a lot more research on what their opportunities are, and they're not the multiple. So I think that plays into sort of our house a little bit. I think there's an opportunity, and there's some great capability in the InsurTech space. I think from our perspective, bringing some of that capability together and placing a few investments with a few different InsurTechs where the capability is complementary to each other is an opportunity for us from an ecosystem perspective to play a part in this space.
Thanks. So just coming back to, it's an Australian crowd, so this will be sort of start with you, Kirsten, here. Are there particularly, in the Australian market, are there particular technologies that you're really, without giving away all your trade secrets, that you're really excited about, or you see us having an advantage over other parts of the world in developing?
Yeah, look, I think David actually touched on this at the start. Climate is a big one. We have a lot of volatility in our weather. It presents a lot of volatility in the business models for insurers. and across seasons across the country. I think seeing new insurance products better at, one flood map, for example, looking at predictions and assessing catastrophic risk for bushfires, for floods, understanding sort of pricing volatility and risk factors for the insurers. I think we should be really good at that. We've got like good access to data. We've got satellite image capability. We've got pretty strong AI and sort of computer vision technology capabilities. So bringing these together, I think there's some really interesting problems that could be solved for the insurance sector in Australia. The other one in the ag space, which kind of links into that, in the parametric insurance space, we've made one investment in that. We look a lot in the ag space for the same reason. The risk to crop disaster and losses for the farmers is a pretty significant aspect for the economy, and primary producers making up such a significant component of that. So I do think they're probably two related but big opportunities.
David or Shaun, anything you want to add to that list?
Okay. Not so much picking a specific technology or area. I think what I'm excited about and why I still see a really strong future, especially in InsurTech, is just thinking about what's happening. The pace of change we're seeing going forward in terms of technology puts the past 10 years to shame, and that was a lot of change, right? Now, if you understand the fundamentals of big insurance companies, they're still dealing with really complex and sometimes outdated systems as part of their infrastructure. Now, the notion that they're going to handle this coming wave of change on their own and be successful is just not going to happen. So I think there's still huge opportunities for smart people with good ideas to get in there and be part of that solution. And to me, that's what keeps me really interested in this industry and why I think there's still lots of growth ahead.
Notwithstanding that our clock's in negative territory now, we've been doing Q&A on the way through, so we've got a bit of time left. Shaun, did you want to add anything to that, or there's a few more questions coming through as well?
I think just from observations, and it's only been sort of 6 months of meeting with lots of wonderful people and understanding their vision and their opportunities, I think Australia has had a lot of innovation and interest in the distribution side of things, your MGAs and the like, where they see disruptor potential. And so that's sort of had 12, 18 months of fruition now. I think what I'd love to see more is innovation in the claim space, and there is definitely Australian Insurtechs that are heading that problem off at the fore, but I think there's much more that we could do in that space, and I look forward to seeing the Insurtechs, some in this room and others, really get a grasp on that problem, because I think that's the area where some of the larger insurers are really struggling.
Back to you, David. So there's a question on the role of governments in, should they do more to support startups generally and insurtechs ideally? I mean, I think most people in this room are likely to support that idea, but question whether that really is beneficial.
Yeah, it'd be great if there was more funding available, right? But I'm not convinced that's going to really help somebody. I know some startups that actually did tap into government funding, and the amount of time and effort they went through to get that funding, I think that time and effort would have been better spent elsewhere. So it's a nice to have. Is it a precursor to success? I don't really think it is. I think there are better places for people to be focusing their time.
Okay, next. This is one for all three, so one at a time. So on a scale of 1 to 10, how difficult is it for an insurtech to gain venture capital funding? It sounds as though most VC investors are risk averse. Starting with you, Kirsten.
We are in the business of risk, so we provide risk capital, but what sits behind that is an extremely robust diligence process, and we have the privilege to sit and look across the landscape of of investment opportunities across not just InsurTech, you know, comparing one InsurTech to the next that we've seen week to week, but InsurTech against FinTech and cyber and AI and ag and, like, you know, technology opportunities across the board. So we're a sector agnostic investor. As I say, if it's a compelling enough idea and opportunity and business model and problem that's being targeted, the capital is there. We're seeing not just the corporate venture funds, but also funds like us that are deploying capital into the InsurTech space. As I say, venture is only suited to the 1 or 2% of startups. So it's a tough game to access the capital, but for the right opportunities, they are still getting funded. You know, Honey, Cover Genius, Lemon, like there are some amazing InsurTech companies that have had very successful capital raising experiences.
This is very tongue-in-cheek, and sorry, Kirsten. I'd say VC is far too hard to deal with. You should try a different path and head down the private equity space.
Okay, and just in 1 minute or less, it'd be great if each of you could just give a brief bit of background on, you know, why you're here, what brought you to, you know, the investing side of and InsurTech as a business personally. Starting with you, I'll just take you in.
Yeah, it was an unexpected route for me, I think, when I first went down this journey. But as I said before, I grew up inside an insurance company or carrier. I spent 21 years with Suncorp, and I worked right across the value chain there, from distribution to underwriting to product and portfolio through to claims, supply chain, event response. It gave me a really good understanding of how the mechanisms of an insurance company work. And I guess the thesis I came in with is, and it might surprise, it doesn't matter how big the insurer is, they've only got a certain amount of funding to do projects and innovation and initiatives. Every year they go through their funding cycles, they do prioritisation exercises, and they pick the biggest return on investment. And unfortunately, that means there's a lot of really good opportunities that get left sitting on the shelf and don't get the attention or the funding they need to do something about them. So I think the opportunity to tackle some of those challenges was what excited me and brought me to this position. So,
excellent. Kirsten?
I get excited every day about, you know, technology changes and what's coming in the world. I'm in a very privileged, I think my job is extremely privileged and fortunate that I get to meet amazing founders solving problems. I think there are huge opportunities to surprise and delight customers and change the experience of consuming goods and services in you know, many different sectors. So that's sort of why I do what I do every day, and I think there's plenty of opportunities in the world. Insurance, industries like insurance, financial services, regulated sectors in particular, there is just so much opportunity for them to be dragged into the future with digitisation and technological advancement. So I think I'm excited by it.
And David, you're 2 minutes 7.
Sure, I'll try to be quick. So look, I was 15 plus years at Allianz, and throughout that time there, probably the thing I was more passionate about than anything was trying to change and transform the business. And I had some great roles. My last one was heading up a 300-person plus transformation team that accomplished some really, really amazing things. But the reality is, it's hard work for incremental change in those organizations, and that's going to be the same pretty much any big incumbent insurer. So when I left a few years ago, I thought, what do I really want to do? And I decided I could probably have more impact working outside the industry to make change happen. And you know, I've got this great world now that I work with people who work a lot harder than I do, and ideally I can be part of that journey working through them. Now, finally, since you might not come back, I'll just make an offer here too. I've found since I've left, I've had a real pay-it-forward approach. I've been generous with my time for anybody who would like to have a chat, and some of that has come around and paid dividends to me personally. So it's a serious offer. If anybody would like to hear a little more about my experience and my opinions, and have some strong opinions, obviously, feel free to reach out through LinkedIn, and I'd be more than happy to have a chat.
So if that should motivate some of you to go out and be the 1%, and if you already are, then these are the people you should be talking to. And on that note, Tetiana, it's back to you.
Thank you so much.